Good afternoon, patrons. This is D here, aka OptionsTender. Just want to do a quick midday market update and also talk about market structure. It's very important that as a trader, especially in the beginning, that you know which way the market is trending, and it trends on all different time frames in different directions. So when you start lining those up, or at least in the short term, lining up with higher time frames and a trend, you're more likely to have a more successful trade. So that's why we're going to go through it. But first, let's put some color in this market here. All right, so we have ES on the monthly time frame. We talk about it almost every day. This is just a consolidation area. We're in a zone. We're moving sideways. We're just wrapping around that 8 EMA. So we are not trending in the long term at this time. In this time frame, we are still in a downtrend from the highs. All right. Weekly. On that weekly time frame, we are, if you look at this and pull back out there, we had the downtrend, ticking up there, and we're still, because we didn't close above that triangle, we're still holding this triangle on the weekly time frame. So it's very important to look at that we actually didn't have any sort of breakout. So we're just simply reversing off of the downtrend line at this point. That's all I want to show on this chart. And then on the daily time frame, we're showing some sideways action. You see, this is a much larger triangulation here when we move these trend lines around. So still just trending sideways. We reversed off a supply, and we're still set up for a very bearish setup in the long run here. Perhaps this is a triangle, A, B, C, D, E, and we continue down, or this is a 1, 2, 1, 2. And we're looking for continuation to the downside. Now, if you're bullish, you're trying to make a case that this is a in Elliott wave terms, that this is a wave 1, a wave 2, and that maybe we're producing another 1, 2, and we're continuing to the upside. So you'd want this 39.30 to hold once again. And so I'm not in that camp, but we have to keep our eyes open for stuff like that. And if you look at the RSI, still triangulating on the MACD as well. Okay, and I did fix. I put all these charts on Twitter, but I just want to point out this new trend line that I made here that has a lot of really good touches on it, and it just kind of it wraps it. It holds price perfectly to this situation. So we're going to keep that up until that's kind of void. And it even matches the lower end of the channel holding up here. So we could, if this is a good channel, then we suspect that our next area of of interest, and I've been saying this over and over in the videos, is this 35 to 3200 area, and we're looking for price to head back down that direction. Now, a matter of when, we didn't know that this was going to bounce so high. We thought we would have came down from this point in particular. Now, technically, we are coming down from this point. We just had a huge retracement to form some sort of double or triple top right there, but massive resistance and rejecting off there. Okay, going down to 65, and then we'll go ahead and wrap this up. And then we'll head up to market structure. Okay, so on the 65 minute, we use the 65-minute candles, so we have even candles during the trading day. So that's why we use 65. You can use hourly if you want to. The last hour is going to have a half an hour candle though. And here's our wedge, our ascending wedge, with a lot of good touches. So it validates it. And we rejected off that Friday. So we broke this minor uptrend and that's a sell signal itself, but we are still in this wedge. So, technically we're in a uptrend, but I am shorting this at this time. And we do suspect that the higher time frame downtrend should continue. And so this is possibly just a 1-2 setup, and we continue to head down into FOMC. All right. And some levels that we're looking at. This was right here was Friday's low. So we're underneath Friday's low. We tried to get back above it, could not, and is rejecting from it now. So our next, I believe, is Thursday's low would be the next level here to look out for. And then below that would be, you have the options expected move, but that's not necessarily it's a happy place for the market, and there is a video for that as well if you want to check out those. But it looks like our weekly would be this uptrend, and the weekly would be very important levels to resume the downtrend, and then we can start talking about much lower prices. Okay, now we're gonna go up to SPX, and I already did this for some people, but not for the patrons yet. So we are going to go to a clear board, and we're not clear because let's go ahead and clear this drawing set. Okay, now market structure. What is it? It's simply on each time frame. We can go on the monthly, we could do this on the weekly. We're just going to do this on the daily today. And maybe we'll hit up the weekly just so we can put it in perspective, but we'll see what kind of time we have here. But there's a couple ways to do this. Okay, market structure is your trend. Which way are you trending? Are you trending up, sideways, or down? And sideways is not necessarily talked about so much, but that's where you're in an equilibrium, and we're actually in that right now on the lower time frames. But after you make a high, this is clearly a high, it is the all-time highs, you break down, and it's official when you make a lower high, but it's still not a downtrend. It's official when you break this low. You break this low, which it did, and now we have a lower. At this point, we had another one as well, but I'm going to consider this one a lower low. Okay? Stay with me. Low, high, lower low. Now the downtrend's official as of this point. We broke that low. Lower high, lower low, and lower high. Now, that's a downtrend. But we started to get into equilibrium when the market had not official, a higher low, not official trend change yet, but you had a higher low right here. And we did not eke out a higher high yet, but we didn't break the low yet either. And so now we're getting lower highs and higher lows, which in other words, like a triangle. And that's where you have equilibrium. That's where the market technically is neutral at that point. But usually when you have an equilibrium, you're looking for the continuation of the trend that you're in. And if it were to break this high, now you have an official higher low, and then you would have a higher high. That would be a shorter term, like a daily uptrend. Now, you want price to make another higher low, and you want it to break this high. That would resume a weekly uptrend. If you start to do that, you're really starting to break this this downtrend. And on a larger frame, if you break this high, the all-time high, then you're officially, even in the monthly time frame, back in that uptrend. And so it's the core of trading, and you want to trade with the trend. Now you don't have to trade with the monthly trend necessarily, but if you're swinging for a few weeks to months, you want to be with the trend of the at least the weekly. So heading down here on the lower time frames, if you want to catch trends that are up, on the 65 minute, you want to follow the uptrend. We look for turns here. So that's very contrarian. So we do look for, like right now, this is a uptrend on a lower time frame. You had a low, higher low, high, higher low, higher high, higher low, higher high, higher low, and so on. And now this is starting to kind of weaken, but it's not confirmed until we break this low. So that would be the overall objective. But we're not going to miss out on all of this area here. So you got to be very careful. When you're trading against the trend, you have to be ready to get out. Okay. Now we'll just show one more time frame. We'll go to the weekly just so we can get a better aspect of what's happening. So in the long run, we're still in an uptrend. Higher low, higher high, higher low, higher high. And so a lot of traders right now are expecting this to be the low is in, and we're going to get some sort of higher high, because that's what the long-term structure is. We think that in this environment, that this is actually going to continue to the downside, where we're going to make lower highs and lower lows. So that's very important. I just want to bring that up and show what market structure is, so you don't trade against it, at least until you're a little bit more skilled and you're looking for different things that might reverse price. But if you're just buying stock, so you want to make sure that you're in an uptrend, and or if you're buying inverse stock or ETFs. Okay. All right. Well, that's it. Thanks for joining us. We will do something else tomorrow. We're going to start doing these videos every single day for the Patreons, and I appreciate your support, and we'll talk to you soon.